Okay, perfect. Hi, everyone. Hope you are well and safe. Welcome to another series of securities trading training. For those who are joining for the first time, basically in this training session, what I normally do is I actually provide additional information on how to become a better trader. And we discuss things. We've started off these sessions several weeks ago, about 2 months ago, where we spoke about trading psychology, but then we moved on to discuss things like that are pertinent to charting and indicators and understanding support levels, resistance levels, Fibonacci, things like how to basically enter, how to exit a position, also identifying various ways of trading a stock, and so forth. So you can see all the various and the old series on my YouTube channel, and you have all the details. In fact, I've created a playlist which basically has all the past training sessions. So if you go to that playlist, actually let me show it to you right now live. 1 second. It's right here. Okay, so if you actually go to playlists right here and you click on how to trade stocks, well, actually, if you just click on view full playlist, you will see that you will find all the various training sessions that were conducted. So just make sure you can go through trading psychology, support resistance, Fibonacci, moving averages, candlesticks, MACD, stochastic RSI. We've gone through market environment, trading breakouts and fakeouts, market sentiment, trading the news, TTM squeeze, and then we did some charting exercises last week. So a lot of material is available for you. Just go through these material, and hopefully from the feedback that I have received thus far, it has been very helpful to a lot of people. So just go through the material, and if you have any questions, just feel free to reach out or wait till the next session and ask your questions. But this is basically material that I'm putting out for all of you to actually benefit from. So a lot of the questions actually that I received on Twitter, which I will go through today, have been responded to in these sessions. So just take the time, go through them, and you will see that a lot of your questions have been addressed, especially that there are many questions. And by the way, just for whoever is new, whenever I'm looking here, I'm looking at my other laptop. Whenever I'm looking here, I'm actually looking at my drink and planning to have a sip. And obviously I have the notes with all your questions as well printed out. But there were many questions about when to sell, how to set up my exits, when to sell, entry and exit, when to sell and re-enter. All of this I have actually discussed in the sessions. I'll touch base on it today because there are clearly many questions around that. So I want to make sure that I address it once again. Plus we'll take the full hour just to make sure that all your questions are addressed. But please, once again, take the time, go through the training sessions. I'm putting this material for you guys out, and believe me, this material will help. So all you need to do is take the time and go through that material, because no one is going to go into that material for you if you don't find the time. So and I'll keep on referring you to those sessions whenever there's a question that repeats. But so that's another playlist. Another playlist that I created was actually watch live stock chart analysis. And in this playlist, you will see all the daily charting drills that we've held over the past several weeks. Some of these exercises are, of course, they're old now, and they might not be relevant since a chart changes on a daily, basis. However, just by looking at these analysis, just by looking at how I'm actually going through these the thought process of analyzing a chart, that will also help you just grasp the concept and then apply it for your own stocks. So even if it's old, don't look at it in this manner. Look at it in terms of how am I analyzing the chart, and how do you want to analyze it accordingly. Of course, every single trader has their own methodology and secret sauce. However, once you get to that level, once you're comfortable with your own style, then at that point you can apply it. But for now, just try to consume as much information as possible and try to learn as much as possible until you get to that point where you can actually make your own decisions and so forth, which is exactly why I'm doing these sessions. Okay, so today's session will be dedicated to all the questions that have been raised actually on December 13th under this tweet that I'm sharing right here, where basically I asked you folks, what are some of the things that you're struggling with in the stock market? And basically I wanted to gather as much information in order to go through that with you in this session. So I'll go and provide as much detail as possible, and hopefully it will be helpful. If you have any additional questions, please feel free to use the chat box on YouTube and throw these questions accordingly. And if there's any question that I'm answering and you still have a follow-up, please add that follow-up accordingly. Let's see, what's up, bro? Hey, Maurice, welcome. Wendy, hi. Welcome, folks. Okay, so let's crack through this. So I'll be switching between multiple websites and multiple references in order for you guys to better understand what I normally do, in order to better understand what I am getting into once I do trading. So let's start with the first one. Okay. The first question, from Kyle, I kind of struggle with finding a starting point in finding an OTC worth looking into. Okay. What are some key things that catch your eye on deciding to look further into a company? Okay, Kyle, great question. So the first thing that I look at immediately when I consider OTC, first of all, I personally, I've mentioned this in the past, I don't use personal screeners, okay? So I don't use the screeners on TD Ameritrade, I don't use screeners on BMO InvestorLine or anything. It's for me, I like to skim through the OTC market and basically better look at the stocks accordingly. Now, to answer your question, is an OTC stock that does not have volume is something of a turnoff for me. And when I've defined what is volume in the past, also in previous trainings. For me, on the OTC market, I need to see an OTC actually trading at least, I would say, 350,000 or at the very minimum 250,000 worth of dollars before I actually enter into that OTC. If I see it trading $10,000 or $20,000 or $30,000, it is on my X list. I will never go into it whatsoever. First of all, because my investment is going to be bigger, and plus you might be able to get in, but the question is, are you able to get out? And that's more concerning to me. So I need to see a consistent OTC that has been trading $250,000 to $350,000 at the very minimum. If it is on NASDAQ or New York Stock Exchange, it must have $1 million in trading volume, and at the very, very least, 750,000 US dollars. If it doesn't have that, then it's not going to cut it for me. And once again, just remember, I'm talking about volume in terms of dollars. And the way you do that, you take the existing volume and you multiply it by the average price that it has been trading throughout that day. Okay. And of course, if the day has passed, you just go and look at the past day volume and multiply it again by the average price accordingly. You don't take the highest price, you take the average price for the day in order to better understand how much volume there is. So that's one very, very important thing for me before I actually consider an OTC to go in or not. Even if someone actually comes in and asks me to review something for you guys, I would not do the review if it doesn't have enough volume, because I know that you guys might go in, you might like the review, you might go in, but you'll never come out. Unless you're willing to stay there for a very long time and until the volume comes in, which is not my cup of tea. Okay. Another thing that I look at is definitely after, if there's enough volume in that OTC, I look at the chart. If the chart is looking good, and by looking good, which we will discuss later with the entry and exit, is that it is actually looking, ideally looking promising on both the hourly and the daily. So it is oversold in the hourly, it is oversold in the daily, and they're both showing signs that they're going up. If that's the case, then I love it. If it's not in the oversold, however, it's showing upward momentum on the chart, then perfect. That's also another one that I would get in. Also, it depends. I'm taking my time on this one because it does answer a lot of questions. Also, I take in consideration whether I'm going in for a day trade, a swing trade, or a long-term hold. If it's a day trade or a swing trade, I will purely look at the charts. Okay, if it's a quick flip, again, I'll look at the chart. If it's looking nice, if it's looking that it's going upwards, then I'll take that small percentage or high percentage or whatever it is and flip it and get out. If it's a long hold, I will go into more due diligence. It's not going to stop here. I will then look at the stock in terms of how does it, what is the share structure? And I know there are many questions about the share structure over here, so I'll get to that shortly. But basically what you need to do is you need to, for example, go to OTC markets, which is this website, and look under security details. Okay, look at the share structure and how it looks. If it's reasonable, then I'll go in. If it's not, then I will reconsider my position or just flip it if it's for a quick win. Then I would go to Yahoo Finance. Okay, so I'd go to Yahoo Finance, I'd look at the stock. Okay, I'd look at the statistics just to make sure that it actually matches what I'm seeing on the OTC market. And if there are any major discrepancies, then I have no hesitation. That's for long-term holds as well for me. I have no hesitation of going out there, sending IR an email, investor relations, and asking them for a confirmation. If I get an email back, that's great. If I don't receive an email back, that's a red flag, and I immediately either get out of my position if I'm already in it, or to not go in at all. Because as an IR, you should get back to your investors, or else it's useless. What else? I also look at the profile of the company. Okay, so I'm taking MJTV right now because I'm really interested in that company, and I go to their website. So open their website, see if they actually have something legit that is out there. Okay, what do they actually have a product? So I go to their products, see what is their product. So okay, so they have a product that has been actually FDA approved and is selling at $128.30. So I know that this has potential, and this is one of the reasons why this actually took off. I read also the news. Okay, so I go back to Yahoo and go back to the summary and look at the news. So okay, they opened a new wholly owned subsidiary, New England Biotech, entering into the hemp business. So another thing. So I also look at the historical data. So this is a tab that I look at quite closely and see how the stock has been trading. How has it been projecting? Has the volume been increasing? Has it been decreasing, and what have you? And if it's been decreasing, is it because it's consolidating and is planning for another leg up? All of these things must be taken in consideration before you actually make a decision on an OTC stock. So that's how I do it, Kyle, and that's how I refer to it accordingly. Okay, so I'll go through all the questions, of course, that are on YouTube at the end. So as to ensure that all these questions, the initial ones, are actually responded to accordingly. Okay, G-Host asked, knowing a strong support and getting in a trade. So that's something that we actually covered in the support and resistance levels. However, let's go to TradingView. And for whoever is new to this, because I do get this question quite often, the software that I use for trading is TradingView. Okay, I have a link in the description of this stream and every single stream of basically a link that will take you to TradingView. I use the Pro Plus plan. It's for $29.95 per month, but the moment you sign up, you actually get an immediate offer from them to upgrade to their annual plan for 50% discount, which basically brings me down to the Pro plan, which they're the basic plan, and also empowers me with all these indicators. With the Pro plan, I believe they only allow you to put 5 indicators, and I use more than that. I use like 1, 2, 3, 4, 5, 6, 7 indicators. So the Pro Plus is good. And also with the link that I provide, you get a $30 credit. So you basically pay for 5 months and get a whole year in return. So that's TradingView. So how do I look for support, and what is a strong support and what is a weak support? Again, you can find that in the second trading session that I've done, but let's just go quickly through this. Also, sorry, and there's also another session, I believe it's 5 or 6, I don't remember, trading breakouts and fake outs. So that's very important also for you, G-Host, to actually review, because sometimes it breaks the support, but then it's a fake break and it actually retraces once again. So just go through that. But just to go quickly, so right here you can tell, depending on the price, if it's below or above. Let's say that the price is actually below. This is a strong resistance point, okay? So if this is actually broken comfortably, and actually you'll see that Fibonacci level matches that resistance point. Okay, so 0.618 Fibonacci is right at the resistance level. So the moment it actually manages to break that resistance comfortably, once again, comfortably means it doesn't break it just by a little bit, it breaks it well enough, then that's when you actually get into a position, because you're more comfortable that it will continue to move upwards ultimately. Another way is not only to look for support. Look at the stochastic RSI. Okay, so if it's going upwards, right, like it did right here, okay, you might be at this support level, and then it's going upwards. Then I feel more comfortable getting in. And guess what? If you would have actually come in when this just slightly turned across or reversed, and you actually sold when it reached to the top here, once you saw it reverse, then you would have made a good amount of money. You would have made 38 to 50. So you're looking at roughly 18 to 20% profits, just like that. So that's how you go about it. Now there are some weak supports or weak resistances. It depends where is the price action. So for example, here there's a support or resistance level, but this is a weak one. And the way you identify what is weak and what is strong is by the number of candles touching that line. So the more candles touching that line, the stronger the support or resistance level it is. The less number of candles touching a certain line on a specific point, then that's a weak support or a weak resistance accordingly. Okay, so just remember that. Um, okay. So just review my session, Ghost, and you'll see I've given also examples on how to get into a trade accordingly. Now the next one is finding who's actually trustworthy to a certain point. I know all are responsible for their own due diligence. Okay, so who is trustworthy and who is not, in my personal point of view, is dependent on, okay, and I'm guessing you're asking about who to follow and so forth. It surprises me that there's a lot of quick red flags and quick hands out there for people to appreciate that certain people are actually just pumping a stock and then dumping on their followers. In fact, there are details that are being shared online, but people tend to follow um, the trends. This is a normal human reaction. If people are flocking all to a certain stock because someone actually with a large following base said that it's a good one, they will all flock together. They don't, sometimes a lot of the traders make the mistake of, okay, if this person called it, then it's a good one and I should run to it. Unfortunately, the reality is there's a lot of well orchestrated pumping that happens on Twitter, that happens on stock twits, that happens on Yahoo Finance, that happens everywhere. You need to ensure anyone that actually keeps on pumping a specific stock at all times, okay, like consistently, they're not talking about anything else, any other stock other than that stock. And most importantly, they're not providing any facts. So they're not providing you with details, they're not providing you with charts, they're not providing you with anything. They're just saying buy, or this is going to skyrocket 500%, this is going to skyrocket 300%. I've spoken about this in the past. Anybody who puts a percentage increase onto anything, I'd have a lot of question marks. There has to be some facts behind everything that is being shared. If you're not providing the facts, if you're not providing the due diligence, then there's something wrong. So it really up to you who to follow and who's trustworthy. You need to make that decision for your own self. But at the end of the day, some things are quite obvious. There's a stock that comes to my mind that shot up by thousands of percents and now retraced and what have you. It's been pumped like crazy. I've warned people from it in the past. I've never took a position into it because I've seen the pumping that was going around. Okay, so those kind of stocks are things that worry me personally, and I prefer not to get into those positions because you never know when it's gonna that bubble, when it's gonna get burst and when you're gonna get burned, like a lot of people did. Okay, so BRTX, a little joke. Okay, funny. The next one is how to avoid a FOMO. I just covered that, Kishore. So, great question. Just do not chase. Do not chase. If something is actually have increased in price by, I don't know, 100, 200, 300%, why would you go into that? I personally wouldn't, okay? Yes, it might do another 100%. Yes, it might do another 1000%. But is it worth the risk? That's my question to each and every one of you. Is it worth the risk? Is it the only stock that is out there that you need to get in? I mean, like the OTC market does 50 to 100 to 200 to 300% every single day. Well, not last week, but you know what I mean. There are many choices out there. Do you really need to chase that one that has been pumped, or do you really need to chase one that actually did 300, 400% already? That's the question that you need to ask yourself. I wouldn't. Okay? If the chart is telling me that it has potential to continue, then I'm following facts. Then yes, I'm going in because I know that the chart is telling me that it might continue even more. But if you're just going in blindly because people are flocking to it and because someone said that it's going to go up, then get ready for a bad ending. and get ready to hold it for quite a long time. So just think about that whenever you're making a choice. Okay, so Amanda Kelly, the next question: how to do better due diligence than just reading Twitter alerts, where to find the trusted info and red flags and so forth. So yeah, I've touched base on that one in a previous question. Again, Amanda, you need to go to OTC stocks. You need to actually go to Yahoo Finance. You need to go to their website. If they don't have a website, I'm not sure whether that's a good thing or a bad thing. You need to see if there's conflicting information. And if there's conflicting information, again, reach out to investor relations. Twitter is a great medium to see how people are thinking. So it's good from a psychological point of view. And this is something that we've actually touched base on it in previous training. You cannot rule out the trend or how people are feeling about a certain stock. Sometimes stocks move because people feel good about it. Sometimes stocks go down because people do not feel comfortable about it. And that's one of the things that you need to keep in consideration. So, but doing real due diligence, you need to go through the reports, you need to go to the financials, you need to go through the 8K, the 10Q, annual reports, and so forth, if you're talking about real due diligence that you need to put in place, okay? Along with what I mentioned earlier. Tony, jumping on the exit point bandwagon, I feel that's the toughest thing to determine. So, Tony, that's a very important point. The thing is, why are you jumping on the exit point bandwagon? That's my point. That's the point that I was making earlier. Why are you entering into a stock because everyone else bought into the stock? You should not be doing that. You should be entering and exiting from a stock after you look at the chart. If the chart is telling you that it's a good entry, then you enter. If it's telling you that it's a bad entry, you do not enter. Same thing for exiting. If the stock is actually in the overbought area, just like I'll show you right here. If it's actually in the overbought area right here, and it's starting to drop down, that's when you exit. And guess what? It does drop to before. Then you see a reversal. Then you get in. So do not do anything because anyone or a flock has actually decided to buy or exit or what have you. That's not the way to do it. That's not the way to trade. That's not the way to make money, unless you are willing to make 1,000% on one thing and then lose another 3,000% on well, you can't lose 3,000%. You lose 100% on something else, or lose 80%. So lose whatever you want. If you're willing to do that, then follow people, follow every single step. Do your own due diligence. If somebody is actually saying something is good, validate that before you actually say yes or no. So don't follow the bandwagon. Just that's the point that I'm stressing here. Follow what the chart is telling you accordingly. Okay. Next one, share structure really confuses me, so a understanding on that would be huge. Okay, very good. So let's go to no, not here. Where is it? OTC markets. Okay. Okay. Share structure and what have you. So the share structure is a very important element. First of all, you want to make sure that you have a current share structure. If the dates are quite old, make sure you validate it with the investor relations, or look it up in their annual reports. If you can't find it, then reach out to investor relations and validate the information accordingly. Anything that is very old is questionable, so just make sure that you have the right information. So that's the first and foremost. Second of all, market cap is basically the current price that the stock is trading at, multiplied by any of the shares that have been issued, not issued, sorry, the shares that are available on the market for trading. So you take that, you multiply by the price, and you get the value of the company accordingly. Now, the authorized shares are basically the shares that the company has authorized for the company accordingly. So I'm not explaining it well here. Authorized does not mean issued. Okay, authorized is the total number basically of shares that the company is making available for the company. Okay. They might use it now, they might use it later, they might use it in 2 years, and what have you. So for example, BRTX, if you go and check their authorized share, you'll notice 300 billion. Do we have 300 billion shares on the market? No, we don't. We have, I believe, 1.57 or 1.78. I don't even remember. Actually, let's check it right now. BRTX. Okay, so BRTX, here you go. 300 billion authorized shares. Again, authorized, not issued. That's important. Outstanding shares, those are the shares that have been issued by the company. Okay, issued. So that's different. So there's 2.7 billion that have been issued from the 300 billion. Now, 300 billion could be issued later on. It could be issued in a year, 2 years, 3 years, but they have not been issued. That's important. Restricted shares. Restricted shares are the shares that have been issued. However, they're held. They're under a restriction, so they cannot basically be traded and what have you. Unrestricted shares are 1.844. Same opposite meaning here. So unrestricted, they're open and available. Okay. Then you have the float, and the float is the key and extremely important metric. So this float, I can tell you right now, is wrong, because it's not 6,979,000. The float is actually what is being allocated to traders. So what could be traded on the market. Okay, this is the number that could be traded on the market, and this is the mistake that a lot of people make. A lot of people think that the outstanding shares are all the shares that are being traded on the market. So that's wrong. Okay, it's the float that you need to take in consideration, and you need to validate and make sure that it's right. It's the right number. Yes, the outstanding share number is very important, don't get me wrong, but you really need to know how many shares are out there available for trading. Okay, so if a lot of the outstanding shares is restricted, then even better. You just need to understand what is the restriction. Are they going to be released at a later time, and what have you. All of these questions you need to dig in or ask the investor relations accordingly. Okay, so let's go back. Just going to also put, sorry, running out of battery. Okay, now for instance, right here we have 338 million shares outstanding. Okay, so, and 15 million float. Again, 2017, 2019. You need to validate those numbers before you actually say it's good to go or what have you. But so that's what the share structure actually mean. Now, personally, I prefer, especially for long-term holds, I prefer a company that has an outstanding shares of roughly 1.5 billion shares, maximum 3 billion. That's maximum, okay? And the float, it's way much better if it's in the hundreds millions. So that's personal. If it has a 12 billion outstanding shares or what have you, then I would probably be only flipping that one or just day trading it or swing trading it, taking advantage of the chart movements. But that's pretty much it. I wouldn't be looking for anything else. So that's chart structure. The next one, okay, chart structure. So we've explained that. Determining exit points before opening a day. That we've explained that. Knowing when to sell. Again, we've spoken about when to sell, how to set up my exits. Again, all of these questions, the one that I've touched base earlier on, and also please refer to that lesson of when the trade outs and fake outs, and also the lesson about support and resistance and what have you. All of this has been discussed with examples. Entry and exit on trades, again, same thing. When to sell and re-enter, again. When to sell and re-enter, actually. It's a great question. I think I'm just going to touch base on it pretty quickly. When to sell, I always personally sell when I see the chart reversal, okay? So when, for example, when you're over here, okay, and I see it actually dropping below the signal, I sell. Okay, when do I re-enter? When I see it actually coming out of the oversold area and heading upwards. When do I sell? When it actually dips. When do I rebuy? When I see an upward movement. When do I sell? When it actually descends. So again, it's the chart that tells you when to enter and when to exit. Okay, it is straight in front of you, to be very candid with you. You just need to follow the chart. Trust the chart, as I always say. So that's to answer that question. What is the best platform for screening stocks on phones? I have regular full-time job, so my Samsung phone is my trading platform. I use Ameritrade, but it doesn't show chart history for many pink sheet OTC stocks. Any suggestions? Okay, so I think you've received several suggestions, Andy, but I personally do not trade on my phone. I need to actually analyze the chart well before entering and exiting into a position. I just can't do it over the phone. So and again, screening is by going through the stocks by myself, and then looking out for those that have high volumes and getting into them accordingly. But I do not use any screeners, to be very candid. And also, if you're trading on your phone, I honestly don't know how you guys do it. I know a lot of people do it, right? So I'm not saying anything here. I appreciate if you're comfortable with that, then fair enough. But I don't know how you guys analyze on your phone a chart. So I know that you're working, so I appreciate your position. I appreciate that you have a job. However, you really need to dig into a stock and not just buy on the phone just because something is telling you that it's flying or what have you. That's what I'm saying. Be careful of FOMO. Do not get into a stock just because it's flying or what have you. Screeners are great, but at the same time, it could be increasing quickly at the beginning, but then slowing down. So you're basically, you're literally, excuse my French, screwed. I can't find another word. So you need to look at the chart and decide on your entry accordingly. If the volume is there, your second step is the chart. Okay, so just make sure that you actually do that. Brett, where to set stop and loss? Similar to what I answered earlier. Again, you set it based on the chart, and you set it normally. It depends, like for example, Fibonacci also allows you to evaluate that. So here is a Fibonacci retracement. So you draw the Fibonacci from swing low to swing high, and then it gives you different levels. So you know that 0.786, for example, is one level, and this would have been a very good entry just around here. Some people would sell right here at this Fibonacci level, some people would sell right here, some people would sell right here, and so forth. So that's a way to do it. Another way is to draw the Fibonacci extensions, especially if you're making new highs. The Fibonacci extensions would give you how far this will go accordingly. I've explained that also in the Fibonacci session number 2. So just check out this session and you will know when you should enter and when you should exit accordingly. Okay, over trading, as in going into multiples. No, hold on. No, I have a tendency to not trust my due diligence, and I get out before I see any large profits. For example, I've bought into all the big plays over the last 6 months, but I don't stay in them long enough to see any significant profit. I don't trust my gut. I listen to the noise. Bravo. So Nathan, that's exactly what I'm referring to. You listen to the noise. And I'm telling you guys, weed out the noise. Weed out the bashers. Weed out the pumpers. Oh, the bashers and the pumpers are exactly the same to me, okay? So focus on the chart. If the chart, and I'm going to say that over and over and over and over again, okay? Your best investment, and I'm being extremely serious here, your best investment will be in learning the charts, learning the tools that I'm giving you, and getting a charting software. TradingView, I prefer, but if you have another preference, listen, the $30 that you're going to invest in that will save you thousands and hundreds of dollars, okay, in return. You're spending, literally, if you're a TD Ameritrade, you're spending almost $14 just trading, buying and selling, okay? This is a tool that is being provided for you, and that will help you make the decision accordingly. So if you can't invest that into yourself, then you're also setting up yourself for failure, or just following the noise. So Nathan, once again, make sure that you enter and exit based on the chart. If it's in the oversold area, then I am personally comfortable getting into a position. Even if it goes lower, who cares? Even if it goes lower, because I know you're already buying into the oversold area. So I'll get in, wait, drops a little bit, who cares? And then I'll wait until it gets into the overbought area. And when I see it cross over the signal, as I explained in all my videos and my trainings, then I'll drop it. If you're day trading, or if you're swing trading, if you're a long-term holder, then you don't care about the price fluctuations. But that's how you avoid missing large profits. But one other thing, Nathan, if you've made profits, then I know it's annoying. Listen, I've done it many times, that sometimes I sell something at 100% or 200%, and then it goes another 300 and 400%. Listen, it's annoying as hell. But you know what? I won. Think about it this way. You did not get out with a loss. You got out with a win, okay? And that's how you need to think. As I mentioned in the past, in previous trainings, small wins accumulate to big wins, okay? I'd rather make 10%, and I know in OTC that's absolutely nothing, but you know what? 10%, 10 times gives you 100%, okay? Whereas 100% that you hold on in hope of it actually making 200% could end up being 0% or even negative. So just keep that in mind. Follow the chart and make sure that you time your entry and exit accordingly. And if you miss on profits that could have been more, hey, who cares? You made profits. That's what counts. I'm talking a lot. Okay. Hopefully this is helpful. What I'm sharing here. I know it might be boring to some, but I'm answering questions, so I'm trying to uh, be as informative as I can. Okay, we did that. Okay. Okay, how to recognize potential reverse split and dilution. So reverse splits and dilution. So first of all, dilutions. For those who don't know what's a dilution, just in case you're a new trader or what have you, dilution is actually when the company issues new shares and on top of what exists, or they do an offering where they sell additional shares to raise more money. Okay, and then these people who take the shares decide to dump it right away and take their money and what have you. That's dilution. So the way you recognize it is first and foremost is within the 8K. The 8K actually has a line that tells exactly the dilution, okay, as part of the finances. So you'll know whether the company has issued more shares or not. Another way to look at it is the 10Q. 10Q. Look at the 10Q and look for words like offerings, words like warrants. So warrants, offerings, and what have you. These are all dilutions. Okay. Look at how many times they've actually done it. Look at the annual reports. All of that. Obviously, once they announce that they have done an offering or what have you, if you don't want to wait for the 8K or the 10Q or the annual reports or the quarterly reports, you know that shares have been issued and there might be potential dilutions. If, for instance, creditors have received a certain number of shares and the price is continuously going down, you know that they're diluting 100%. Okay, so there are multiple ways of doing it. The reverse splits, honestly, you have to wait for the company to announce it. If a company is actually has a large number of shares, let's take an example. If a company wants to like BRTX, let's take BRTX for instance. BRTX has currently I forgot already, 1.79 or 1.57 billion shares. The plan in the court papers and what have you is to uplist to Nasdaq. Uplisting to Nasdaq, you need to the company needs to be at $4, or by exception $2 or $3 if they meet certain requirements. So they need to get to $4 or $2 or $3. With their current share structure, will they actually go to Nasdaq? I'll be very candid. Absolutely no way. No way. Okay. So they said they won't do a reverse split right now. Okay, which is understandable. Will they do it in the future? I would be very surprised if they don't, because think about it this way, and logically, and that's how you need to think about anything when you're trading and when you look at the share structure. If we're talking about 0.3, so 30 cents BRTX, that means the company is worth almost $600 million. Is it really worth $600 million? Yeah, maybe with a pump or what have you, it could get there, but will it stay at that level? Probably not. Okay, so it could get to 50 cents, it could get to $1 or what have you. Will it stay at that level? No way. No way with this share structure, because the company is not worth that much at this time. Will it be worth that much once they progress with BRTX 100? Once they do, they become current. Once they have sales and what have you, absolutely they will be, and that's why it's a long-term hold. Okay, but are they today worth $600 million to $1 billion? If you really think so, then I don't know what to tell you, because they're not. Okay, so once again, it may go to these levels, but it will never remain at these levels. Impossible. Okay, so just think about things logically, please. Okay. So reverse splits, you have to wait for the company to announce it. And unfortunately, the perception is that reverse splits are bad by investors, but the reality is it doesn't do anything to your holdings get cut by half or by the multiple, and the price gets multiplied by that multiple. So it's the same as a split. To be very candid with you, the split, your shares get multiplied by that factor, and the price gets cut by that factor. So nothing changes, but for some reason investors don't like reverse split and they take it negatively, so they dump. So that's what you need to know, and that's what the most important thing that you need to know is that this is very bad news normally when a company does reverse split, although it's in reality it's nothing. It's just boosting up the price, and your shares accordingly get cut by that factor. Understanding what is a good structure in OTC, done that. When to sell a stock, done that. I would love for you to walk throughout the process of strategy identifying OTC stocks. We've discussed that. When to take a loss and move on versus when to hold and wait for PR. Okay, so that's a very, very good question from To the Moon, dollar to the moon. So this is very much dependent on you, To the Moon, and very much dependent on your tolerance level. Okay, so is this a quick flip or is it a long-term hold? Is this a company that you're actually day trading, swing trading, or is this a company that you actually believe in strongly? So for me, and this works for me again, if this is a long-term hold, I will not. I will leverage, the fact that it's dropping and average down continuously. Okay, because I believe in the vision, I believe in the product, I believe in the management, I believe in everything. So I'll take that and keep averaging down accordingly. If it's a quick flip, it really depends on the chart. Again, if the chart is telling me that this is early on and it's gonna drop and what have you, I'm personally, I know the OTC that it fluctuates 50% one day, it could increase the next day 100%, it could increase one day 100%, and then the next day drop another 50%. The OTC is a crazy market. So I personally just continue to average down unless there's an anticipated bad news. Okay, if the chart is telling me that there's a TTM squeeze and that squeeze is heading down, okay, even more, and I may potentially lose a lot of money, then I'll drop it. Okay, so again, I let the chart lead me. I don't especially in those short-term quick flips stocks, I don't make the decision on that one. I let the chart make the decision. For long-term holds, as I mentioned, I just average down accordingly. Okay, OTC is a market that you also need to be cautious of continuously just dumping because you lost 1%, 2%, or 3%. This is a market that actually fluctuates a lot. Personally, I don't feel comfortable just dumping because I lost 5%, 10%, because I know that it will rebound unless the chart's saying otherwise. But if I'm going to start dumping every 5 to 10%, then I'll be losing a lot of money. Let's just put it that way. Okay, appreciate more insight on SANP. Okay, so that's non-relevant question. And seeing cult like the following in OTC, especially in some of these cancer curing stocks. OTC, I'm invested in PT because I know that what these companies do. Okay, I'm not sure what is the question here. Looks like it's kind of a promotion for PTNYF and IPNFF, but whatever. If you're referring to the cult, that's what I'm saying. Weed out the noise. Do not follow what others say. Do your own homework accordingly. Okay, there you go. So those are the questions for tonight, folks. Let me just go through. Hopefully that was helpful. Hopefully it gave you some insight. Let me know in the comments whether it was helpful or not. I'll just go through and see whether there are other questions. Okay, good evening. The candle rule. What is the candle rule, Maurice? I'm not sure I understand. Um, I'm struggling with Fibonacci. Don't know if I'm doing it right. Okay, Ahmed. Let me give a quick example for Fibonacci. I've explained that in a separate lesson. It's quite. Let me explain that. So here you go. So for you, Ahmed, look at this. So Fibonacci levels, you draw it from swing low to swing high. If something is moving upwards, if it's actually descending, you draw it from swing high to swing low and so forth. So here it is. If you want to know how far something is going to retrace, you draw the Fibonacci just like this. This is the swing low. This is the swing high, and here you go. That's it. Swing low, swing high, swing low, swing high. Okay, and now you know that how much it's retraced. For example, it retraces to the 0.786 level. Okay, which is quite a popular level actually in OTCs. I'm not saying that they don't bounce back on 0.618 or 0.382, but a lot of them actually go to the a lot of them actually go to the 0.786. A lot of them. Let's look at WSGF. Okay, look at WSGF again, hovering around 0.786. Forget BRTX, because BRTX breaks all rules. BRTX loves to go over 100%. And by the way, this is not the first time it does over 100%. Notice the last time it went up, boom, it did over 125%, 130% retracement. This one time again, another 130% retracement. So BRTX is the ultimate exception. MJTV, again, MJTV, guess what? 0.786. So it's a very popular level that it retraces at. So that's that. In terms of Fibonacci extension, Ahmed, this is what you normally do. I know this GMGI is making new highs. So for example, for a stock that is making new highs, or even any stock, to be honest with you, it doesn't have to be one that is making new highs. You just want to know how far this goes and when to take profits. You go here and you take Fibonacci. Where is it? Trend-based Fibonacci extension. Again, remember the rule? You start from swing low, if I can put it properly. Okay, swing. Okay, this is annoying. Okay, there we go. Okay, I'm gonna take another one. I can't do it on this one. Okay, swing low, swing high, and it retraces. And where it the one that retraced the most. Okay, so notice here. Let's go to the daily so you can see it more properly. Okay, let's go to the weekly. Okay, so you can see right here on the weekly. Yeah, it's not good. Okay, actually, let's go back. Okay, so as you can see right here, where is it? Right here. So notice we drew it from, again, swing low. Okay, swing low to swing high, and then to the retracement. The Fibonacci extension gives us levels of how far it will go even further. So if you were an investor and you bought right here or right here, you know that this level is a good level to sell at. You know that this level is another level to sell at. And guess what? This level was a peak right here. You can tell. It reached 7.264 and then it dropped. Look at this. Look how accurate Fibonacci is. 0.786 is 7.745. And the highest it reached to is 7.485. Exactly. Actually, sorry. 0.003 higher. But if you would have sold at 7.45, you probably caught it at the very top. Okay? So that's Fibonacci extension. A Fibonacci extension tells you how far it's gonna go accordingly. Just do that whenever you want. Okay. Does a stop sign really matter? Yes, it does actually. So a stop sign, when it's removed from an investor standpoint, Maurice, again, it's all psychological. It means that the company is moving in the right direction. It means that the company is doing everything right, and all these negative and bad aura around it are being removed. So yes, a stop sign also gives confidence to the investor when it's removed. When I go to a website like OTC Market, where is it? And I see this, it just doesn't mesh well for me. Okay. When I see this PRTX again, it doesn't. These things need to be removed. Delinquent as SEC reporting, just like your question about the stop sign. Delinquent SEC reporting is not assuring, so you need to do that. You need to get that sorted in order for things to increase in price. So it's all psychological. It's all important, and it all impacts the price eventually. Okay, when do you take profit? Okay, Suraj, so I've discussed that, and please refer to the previous lesson. How do you manage the risk for trading OTC stocks under 0.003? Chart, Raymond, chart. Again, I manage the risk by looking at the chart, and again, entering when the chart is telling me to enter and exiting when the chart is telling me to exit. And not being greedy. Don't be greedy in this market, especially in OTC. Don't be greedy. If you're greedy, you'll get burnt. You'll get very burnt. Follow the chart. It will go a long way. And that's why I tell you guys, get a charting software. TradingView is fantastic. Believe me, it would be the best investment that you will make for yourself. And you will make accurate decisions for yourself, not from others. Okay. I think I've covered all the questions. Hopefully that was helpful, folks. We're 1 hour, exactly 1 hour into this. Hopefully that was helpful. And hopefully I answered all your questions. Keep those questions and all these gems coming. I know a lot of you are just getting into this, but hopefully, again, go through the information. Go through the playlist that I shared earlier for trading. Look at the videos. Ask questions. No question is a stupid question. In fact, what you think is a stupid question, as I said in the very first video that I created on YouTube, what you might think is a stupid question is probably someone is actually thinking about it. So no matter how basic the question, you know what? We're all learning. Nobody's gonna laugh at you. And you know what? If they're going to laugh, let them. Who cares? At the end of the day, you get the information you need and you get what you want out of it. So always ask questions. Always dig further. Read. Do not wait for anyone to spoon feed you. Whether trading, whether in looking for information, whether like I get questions on Twitter, I honestly get baffled. I'm like, I'm not gonna do your homework. You need to do your homework. Nobody's gonna do the homework for you. So please put an extra effort. If the stock market is an easy place to make money, everyone would be making money. You would have no one poor in this world, and we would all be filthy rich. Okay? You need to educate yourself, know what you're doing, do your due diligence, learn, invest in yourself, invest in other tools that will give you a return on investment, and then you will get better. You're gonna make mistakes. Again, don't get hard. Don't be hard on yourself. Make the mistake once. You make I said that before. You make it the second time, that's fine. It happened. You make it a third time, you have no one to blame but yourself because you made the mistake 3 times. So if you FOMO 3 times, I don't know what to tell you. You're gonna learn the hard way. Okay, folks? Thank you so much for your time. I appreciate it. Have a fantastic rest of your Saturday. And good luck. Hopefully next week will be a better week. And watch out for my video reviews tomorrow. Stay safe. Be well. And I wish you all the best. Have a good night. Take care, guys. Bye-bye.